You mentioned a student-based workforce. What does it mean?
The point is that Comarch is strongly present on the universities. Its main quarters are located in the cities with strong universities, such as city of Krakow or Łódź or Wrocław, where there are a lot of students. And company is having its internships very successful, because about 70% of students last year stayed within a company. So this is the way how the company is managing the rising salaries in the IT sector, because of course students demand a little bit lower salaries, and within 1 or 2 years they are able to be fully precious employees. So this is how the company has its workforce strategy based on students.
In one of your slides, you say R&D is an alternative for acquisitions, and yet this is more like a system integrator, this company. So I'm just trying to, what is the difference? How do you link the two?
So let me take this question. So actually, the IT market is very specific because it requires really being up to date with innovations, new solutions, and some companies have to actually invest through R&D, and some decide to go into M&A and purchase these intangible assets such as new solutions and innovations through acquisitions. In case of Comarch, this is definitely the strategy of internal development of new products, new solutions, such as, for example, products for healthcare like Home KTG, which is currently the product for pregnant women who are able to monitor their health data and send them directly to Comarch Center. And so far, this strategy came up to be more successful than the M&A strategy of other companies, especially due to the fact that the company possesses significant and really good resources for conducting this research and development.
Just to add, Comarch will launch its IT lab in Krakow this year. It's the unique investment worldwide, because Comarch will be the only company worldwide which will produce, develop, design, manufacture, and implement both hardware and software solutions connected with Internet of Things technology, which is currently the fastest growing technology in the IT market. The CAGR growth is estimated on about 70% per year. So Comarch, we assume that Comarch will create additional value by these investments.
You mentioned a holding in a sports club. Why does this company have a holding like that? And is it a trophy asset that brings up corporate governance issues?
Could you repeat, please?
You mentioned at the beginning about a sports club. Why does this company hold a sports club?
Okay, company has established long-term CSR strategy, and we must admit that in Poland and still developing countries, the CSR strategies are not so sound as in Western markets. However, taking that to the account, and the fact that Polish sports industry is specific, so it doesn't bring many profits actually it doesn't bring profits to the companies. Comarch assume sports club being some kind of fundament of their CSR strategy. They, through organizing the events, through sponsoring the sport club, and providing the sport club to develop its infrastructure, can make the society active and generally conduct social active life.
And just to add, also through the sports club, the company organizes events for the children, the sports events, and consequently it supports the local community through this type of activity. So in regards to your question, just to summarize, this is considered to be CSR activity rather than the company's core activity and operations.
And do you consider that the case? Obviously, if the company say that that's what they do it for, do you agree?
Of course, in the beginning we had some doubts whether this would be the CSR activity, or rather something that the company might conduct for their own purpose. However, after we looked deeper into this, this is really something that the company has structured for years and has supported this club. And really this local community appreciates the company for supporting this club. And this also, as I already mentioned, provides the young people with new opportunities. And the community in Krakow is really benefited through this CSR activity. So the answer is yes, we believe this is CSR activity.
There was a comment made about expectation to return to a dividend in 2018. Did I hear that correct? Had they paid a dividend before and stopped? And if so, what was the timing and the rationale?
We'll just can put on the backup slide with the dividend history. So our estimations are actually based on the historical data. So as you can see on the slide, in the past, between 2012 and 2014, the company used to pay the dividend. And due to the significant investments coming right now in 2015 and which are going to continue until 2017, the company has to stop the dividends right now because it will finance this investments through its own resources. And as you can see, our estimations of 1.50 zloty per share of dividend is based on the historical data. And this is still quite a conservative assumptions, taking into considerations the payouts of other IT companies, as well as the potential towards margin generation. So the company has its own property plant, has higher margins than its competitors. So still we believe there is some upside potential if we look into the dividends.
Could you pull up your balance sheet and let us have a look, please?
Actually, it does tie to a question. You mentioned that they spend a lot of money on property, plant, and equipment. How are they able, after netting out the depreciation, you said to keep fixed costs extremely low? It would seem to me that if they're adding on data centers and buildings, that their costs would actually be increasing after depreciation. How do they account for that?
You mean apart from the depreciation, what are the company's fixed costs? Or
right. So if they're adding aggressively to property, plant, and equipment, how are fixed costs maintained so low?
Yes. So if we look into the other IT companies on the market, they are mostly renting the data centers as well as own property, plant, and equipment. So the fixed costs actually are quite high because they have to pay the rent. These are mostly long-term agreements, and in case of Comarch, only the management of these fixed assets is their fixed costs. So actually, the cash flows connected with the data centers and owned property is located in the operating cash flow instead of the profit and loss. So still we can observe high return on these fixed assets. If we look into the return on invested capital, the company really provides investors with the good return. I think Marcin could also tell something about it.
When it comes to the return, the company can generate a return on invested capital up to almost 12%, which is higher than the weighted average cost of capital, which is about 7%. And this 5% of spread, together with a rapid growth of about 8%, creates value within the company. This creates consequently the cash, and therefore the cash is able to cover the potential payout of the dividend. And what is more, the IT industry is based mostly on variable costs, which are the costs of the labor. The company eliminates all of the other fixed costs, and therefore it can maintain the level of fixed costs low.
You mentioned they were located in tax havens in Poland. Is it forever? And what do they save on the tax bill?
When it comes to the tax benefits that are coming to the company, it was valued separately. It was valued as an other operating asset. And this tax benefit, thanks to operating in special economic zone in Poland and exactly in Krakow, it is going to be maintained until 2026. It is the government guarantee for the company that it will be able to charge tax benefits. And this was implemented into the model. No other assumptions according to tax benefits, like longering this period, was implemented.